Four, three, two, one. We are live. Hello and welcome to PropTechBuzz, a business podcast on global PropTech, where we talk to PropTech's CEOs, founders, and VCs from all over the globe and learn from them how to build and manage world-class PropTech companies. Today, I'm thrilled to have with me Aaron Letzeiser, who is the co-founder of Obie, and Obie is an insurance technology solution designed to meet the needs of modern real estate investor. With Obie, you can request a quote in under 5 minutes. I would spare the detail. We have the guest, we have the CEO who's gonna go through the details of what Obie is. I've never had any guest who was on the insurance tech side of real estate, so that is what keeps me exciting today. And Obie received 25 million Series B funding, and we will understand from Aaron the details of what it is. Massive validation from the market, massive success it has seen. The only confusion for me for players like Obie is it in prop tech space, insure tech space, fintech space? So that is also something that we will clarify here. So let's join hands and welcome Aaron to the show. Aaron, welcome to PropTechBuzz. How are you doing today?
I'm good, Ravi. How are you? Thanks for having me.
I'm doing great as well. We had a few hiccups, but finally, I'm so excited to have you here. Before we get into the meatier stuff about Obie, why don't we talk a little bit about your career trajectory, your transition story into building Obie?
Sure. Yeah. So I have a bit of an unconventional path to getting into the prop tech and the insure tech space, which I guess we'll talk about here shortly. Which one it actually is. Started my career actually in the public policy space. So spent a lot of time working in government. Ultimately transitioning off of that to help my brother, who is also my co-founder, Ryan. His background was in the real estate private equity world. So he likes to tell people he kept me out of law school and got me into real estate. And ultimately, real estate is what's got me into insurance. So that's really what brought Obie here today, is really solving the needs that Ryan and I had in the market.
Got it. And maybe a little deeper in terms of your founding story. So, at what juncture of your life you both felt that you need to bring this up? Like, what was that itch that led you to build Obie?
It's a great story, actually. So Ryan and I were at the Macy's Thanksgiving Day Parade several years ago, probably around like 2015 or 2016, and standing there, and Ryan and I were actually complaining about the fact that we had a claims issue with one of our apartment buildings, and ultimately couldn't get the claim covered. It almost went to litigation because we had a lot of concerns over how the building was covered, how the agent covered it, and really found that there was a frustrating need in this space. Ryan primarily, who had spent a good part of a decade prior to my involvement in the real estate private equity world, and always felt like insurance was one of the largest line item expenses that a real estate investor had, but the one that they had the least amount of control and insight into. People call it the black hole of their P&L. And the reason being is the lenders and the bank, they require you to have insurance, and they have all these requirements around it. And you go out to an insurance broker who goes out to the carrier market, and then you get back this 50 to 100-page document, and they tell you that you're covered. But you're then presented with an invoice on what it is that you pay, and you don't really understand what you're paying for. If you're paying for landscaping service, you see that. If you're paying for the maintenance company, you see that. You're paying to have your roof replaced, you see that. You're paying for property management, you see that. Insurance is one of those things that it's a massive expense for owners, but they never felt truly in control of that. And that was really the spirit of the conversation Ryan and I were having, on a very cold November day in New York City. Was that we didn't feel like we knew and understand exactly where that money was going and what control we had over it. So that's really where Obie got started from, and really what it's evolved into today.
Yeah. So for people who are not familiar with this space, what was status quo then? Like, at what juncture would a landlord get himself insurance covered when he's buying the property? That is when it is mandated. What was the status quo, and what changed? Before and after story for you.
Yeah, the status quo, which unfortunately, if you're not using Obie today, is still the exact same status quo as it was 10, 15, 20, 30 years ago. When you're buying a property, well over 90% of the real estate investment assets in the US, they have debt on them, whether it's an actual traditional bank or a hard money lender. And so those lending institutions always require you to have insurance on the property because they own typically a majority of that asset until you start paying down that debt. And so you're forced during that acquisition process to get insurance. And so that process then is you gathering all the physical property information about that specific asset. You out to maybe an insurance agent or a broker, and then they're going to go out to the carrier market and they're going to procure a bunch of quotes. And all of this is done via spreadsheets and PDFs, and even back, in the mid 2010s, people were still utilizing fax machines to do a lot of this stuff with carriers. Our agency, as much as it pains me, has a fax number because there are still carriers that want to provide things.
What do you mean by carriers? Sorry to interrupt you. What do you mean by carriers? I'm not familiar with that word.
So carriers are your insurance carriers. So like a Travelers Insurance, Nationwide Insurance, the insurance companies.
Got it.
That's where they have to go out to. So you're filling a lot of PDF and Excel spreadsheet applications out. You're filling out all that physical property information, and then they're sending it off to those insurance companies to get a quote back. But when that quote comes back, it's in a PDF based format typically, and it's coming via an email. And so me as the owner, I might look at that quote, and that quote might have a $10,000 deductible on that insurance policy. Well, I might want to know what the price looks like for a $5,000 deductible or maybe a $50,000 deductible, depending on the size. I might want to change some of the limits around because I feel like, certain potential things that you might use insurance for are less likely on this property than other things. And so I might want to mess with those limits and increase them or decrease them as I see fit. But it's not exactly an a la carte menu. It's not as easy as going online and adding something to your shopping cart and changing the quantity. You have to go back to your insurance agent, who then has to go back to those carriers and those insurance companies, and they're going to adjust to those rates based on a lot of those requests that you made. And after a while, they're not going to want to continue to change, the equation to see how that price comes out. And so, you might only get one or two back and forth, and each one of those is going to come with another static PDF. So you change the deductible from 10,000 to 25,000, but you didn't change anything else. And so you don't really fully feel like you're the master of your own destiny. You don't feel like you're in control of being able to make that decision because of how fragmented the experience is between you as the end consumer and the insurance carrier and their actuaries and their underwriters who are actually the one putting together that price. And so that was the status quo at the time. And Ryan and I got a lot, pretty frustrated with that, especially when the personal lines insurance market, so getting your homeowner's insurance or getting your car insurance, had really come a long way over the last decade. You can sit online and go to Geico's website or go to Progressive's website and get an insurance quote, right? There's the Geico Gecko. He's on all the TV commercials, and Flo from Progressive. And, they made it easy to get insurance, but they hadn't done that yet for commercial insurance, especially for real estate investors. And so Ryan and I set out to make a product that was as easy as sitting on your couch on a Saturday morning and buying insurance without having to talk to anybody. Enter the information inside of the quoting flow, adjust any of those limits, right? You could spend an hour there creating every combination of limits or deductibles that you want. And then you feel really good about the price that you're committing to. You might not be happy with the price. Again, the bank requires you to have insurance. But I think there's a satisfaction in knowing that the price that you're paying is the price that you created for yourself within certain parameters.
Right.
And so it's not just this number on a piece of paper that your insurance agent gave to you or that the carrier gave to them. It's really something that you decided along with, potentially a risk advisor or your team, or potentially even your insurance agent. You're sitting there and saying, I made this choice. And it's really important then for those folks to feel like they really were the masters of their own destiny. And insurance historically has always had a very low NPS score. And so if we can make that process of getting insurance that much easier, then people are more satisfied with the overall transaction of their insurance or the transaction of that property. And then every year thereafter, when they have to buy insurance, we make it that much easier for them to be able to get.
Got it. So you mentioned about lack of control, completely understandable. but what makes it back in control? What are the elements of that experience that makes you happy about it, that gives you control about the business that you are getting into?
Yeah, one of the biggest things that we made a priority was making sure that as you were going through the quoting process, that you ended up on your final screen, almost your checkout screen. We wanted to give you control of those variables. So we might make a suggestion on what we think based on the characteristics of you and your property, what we think the best coverage might look like. We give you that good, better, and best type of option, but then you can go in and customize whatever you want. You can
Got
go
it.
in and say, hey, I want to change the deductible. I want to change the limits. And so that's where I think that better feeling about insurance really comes from. It makes you feel like you've made that decision for yourself. And what's important as well is, like, in the event that there's a claim, in the event that something comes up, you don't have that frustration of saying, hey, well, I didn't feel like I was totally explained this, or I didn't know that this wasn't covered, right? You made that decision for yourself as you were going through that process. So if you wanted a little bit more coverage and you're willing to pay for that, you made that decision. You were deciding that was going to have an impact on your P&L and whatever property value that impacts on a cap rate basis. Or you might decide, hey, I'm willing to take a little bit of risk. I want to have less limits or maybe a higher deductible, and I'm going to pay a little bit less for that. But in the event that there's a claim, I might have to pay out a little bit more. But at least you get to make that decision, and somebody else didn't make it for you. There wasn't an insurance company. Again, no offense to them. It's really the way that the market has been built for decades, centuries. We wanted to make sure that you felt really good about that purchase. And the only way to do that is if you're in control of the variables that you have when you're making that purchase.
Got it. Help me understand about starting an insurance company. Can anybody get an insurance? Can get started with it, or does it need certain licenses? Do you need to get qualified to run a business of this kind?
You do. I mean, I'm a licensed insurance agent. I have been for many years, and what Ryan and I say is a lot of these insurance companies have been around for centuries. Some of them. I mean, Lloyd's of London is probably the oldest. That's been around since the Great Fire in London hundreds of years ago. What Ryan and I tell people is, had we known what it was like to start an insurance company before we got started, we probably wouldn't have done it. We went in with the naivety of knowing that insurance was a really big pain point for real estate investors. And so from that, we wanted to figure out how we did it. And I think, that naivety was good. We didn't have the scars and the battle tissue and the wounds from folks that have been in this industry for a very long time. There's a reason State Farm has been around for probably close to 100 years, if not more. There's a reason these companies are the way that they are. And I think, Obie's been very successful in building the type of technology-based insurance company that we were looking to build. But it's a difficult and arduous process, as it should be. At the end of the day, you're paying a premium into a company, and you expect that when you have a claim, God forbid your house burns down, or you get into a car accident, or you have a slip and fall somewhere, there is an insurance company that's there to help make you whole, and everybody collectively pays into that. And so there is a large responsibility there, and so it really shouldn't be easy to do it. But again, had Ryan and I known what we know now, we might have stayed in the real estate space instead.
So we don't need to get into the details, but common sense. So how do you manage your P&L, right? Because you need to also have enough cash in hand to disburse the claims, right? Just talk in terms of common sense, a layman's language. How does an insurance business work? How do they manage it, and which are the levers they need to be in control of so that they don't run out of business?
Yeah, so insurance companies, MGAs, programs, they have insurance for themselves, essentially. So they have what's known as, there's insurance companies, and then there are reinsurance companies. And so those are companies providing insurance to insurance companies. And so it's a large web, right? Where almost the entire insurance market, one way or another, is all getting reinsurance then from the same groups. Right. So it really is pooled risk collectively. Even though you're might be buying something from carrier or insurance company A, and somebody else goes to insurance company B, they might all be reinsured by the exact same group, a Munich Re, a Swiss Re, a lot of these European reinsurance players. And so your claim might actually be paid out by the same group, even though you might be getting insurance from different insurance companies. So that's how a lot of these companies continue to make sure that they're solvent, that they can continue to pay out those claims in the event that people have them.
So that means there is zero risk of any insurance company that gets its licenses. Even if they go bankrupt, the reinsurance will take care of it, right?
Typically, it depends on the product, but most insurance in the United States has some type of reinsurance backing to it. And I would also say that most insurance products that your listeners would be familiar with on a day-to-day basis, the final backstop that they have is actually through each one of the individual states within the U.S. So in the event that everyone goes insolvent, there are, the majority probably of insurance products in the US, then the state will actually step in and pay that out to make sure that people are whole.
Got it. And in the intro, I asked you this, right? There is this. Where do you position yourself? InsurTech, definitely, but are you also in PropTech? Like, is there a category where the investors who invest in PropTech are investing in InsurTech as well, because it relates to real estate?
Yeah, we, I describe myself as PropTech or InsurTech, depending on which one has a better market feel at the time. I'm just kidding. Yeah, I say that we're an InsurTech company that's exclusively focused on the PropTech and the real estate investor segment. And the reason I say that is one of the differentiating factors of Obie. It isn't just good enough to be able to get an instant quote for your real estate investment asset. It's really the secret sauce in Obie is that we do this almost entirely through embedded channel partnerships. So a lot of the companies that you might be familiar with within the PropTech space, whether that's Flock Homes or Belong Home or Roofstock or some of the larger lenders. We really have 4 pillars, and within those pillars we have about 70 different companies. And so those pillars are really your buy and sell marketplaces, your digital and analog lenders, your digital and analog property managers, and then a lot of these fund-driven organizations. So you're using technology in some way to programmatically help you to buy and manage these real estate investment assets. And so the differentiator for Obie is that we embed ourselves in a lot of these different PropTech platforms. So if you're getting a loan through one of these digital lending platforms that exist out there online, as you're working through that closing process with those lenders, you're going to get to a point where they're going to say you're required to have insurance for this real estate investment asset. You can either provide proof that you already have insurance, or you can get an instant quote right here through Obie. And the nice thing is that if you request that quote through that platform, whether it's a lender or a property manager or a marketplace where you might be buying a property through an auction or some type of marketplace platform, you can get an instant quote right then and there. And Obie actually ingests a lot of that existing information that you've already provided to that platform. So on the property management platforms, I know what it is that you're charging for monthly rent. I know what your rent roll information actually is. I know what the physical characteristics of that property are. And so we have millions, and probably at this point, hundreds of millions of data points on all of the rental real estate investment assets inside of the US. And so we enrich our data based on the information that we're getting from the partner, as well as our own internal data. And so it really eliminates a lot of the need for asking questions from that actual end user. We want to continue to make it easy. Whereas you asked what the status quo was 10 years ago, somebody was asking me 30, 40, 50 different questions, like what's the square footage? When was it built? How many units are in this property? How many buildings are there? When was the last time you replaced the roof? Right? I don't have to ask any of those questions anymore. I get a lot of that from our different partners because you've already provided a property profile to the lender. Your property manager is already actively managing that asset. And so I can get a lot of that information and make it that much easier for you to actually get a quote. So in that sense, we're an insurtech that is exclusively focused on the proptech segment.
Yeah, so I get that. So most like I've worked with Munich Re before, and I know
Mm-hmm.
they are the center of data. Okay, so I mean, in fact, all the natural disaster data, they have their own models that is proprietary, right? But that's because they have been in the industry for decades, right? For somebody like you, you depend on your partners to get this data, right? And then over time, you will also generate proprietary data with the volume of business that you do. So it'll be a mix of partner data and your own data. Am I right? And if I'm right, what is the maturity of data that you have for now, and how is it evolving in the days to come?
Yeah, you're absolutely right. So it's a mix of what we can get from our partners. It's also a mix of what we can get from our reinsurance partners as well. So they want to make sure that they're not paying out, right, a claim. So what can we get from them as well? And then what can we also mix internally? And so I think the differentiator as well is that when we look at real estate investment assets from an insurance perspective, we put our kind of real estate private equity hat on. And we say, what does this tell us about that landlord? Right? If you were to walk into your local State Farm office today, a big insurance company in the US, they're going to ask you those basic questions: year built, square footage, number of units, right? And so from that's table stakes. Everybody's doing that. What I want to know, and no one asks, is I want to know about you as the actual property owner, you as the investor, right? I want to mix in so many different data points for me to be able to tell, are you cash flowing on this asset, right? Do you have enough free flowing cash flow on a monthly basis based on where your mortgage is at and how much you're charging in rent to actually be doing any proactive maintenance? As me, as the insurance company, if I provide you recommendations on improvements that you have to make in order to make your property safer for you to actually then keep your insurance, I have to know a little bit more about you. And because of the fragmented setup of the insurance market, again, as we talked about before, the status quo is you as an owner or an investor going to an insurance agent, and then that insurance agent going out to multiple insurance companies. They're not really spending a lot of that time asking about you as the owner, right? And long term, what I think that we'll get from that data is us to be able to say, I think you're actually a really safe landlord, right? There's this big push, as I'm sure a lot of your listeners and inside of PropTech and a lot of the other fintech areas, there's now ways, right, of using telematics and insurance. People want to evaluate how you drive, and so they want to reward you with the essentially the safe driver discount, right?
Incentivize for good behavior.
Exactly, right? And Obie at the end of the day wants to do the exact same thing for real estate investors, right? Depending on the property manager that you use, depending on the lender that you use, depending on the type of debt product that you've got and the rent that you're charging on a monthly basis, I can start to build what we use here internally as the landlord profile, the owner or the investor profile. And from that, I want to start rewarding really good investors, right? If you've got a PropTech podcast, you've got a lot of real estate investors that are listening. And, I'm sure a lot of them feel like they're really good real estate investors. And I'm sure they also know some that like they would probably never invest with because they probably feel like they don't maybe manage their properties in the best way or could be doing a better job. I want to incentivize and I want to reward those real estate investors that take really good proactive approach to the way that they've managed those assets. And maybe that's about the team that they build around them. Maybe it's they've gotten debt from a really good high quality lender, and then they also use a really good high quality, highly rated property manager or property management software in order to be able to do that. As we start to connect those dots, it allows Obie long term to do something that's never been done in the insurance market before, which is start actually looking at the person that owns that asset. We do the same thing inside of auto insurance. We look at the car, but we really want to know about the driver. Do you stop at a stop sign? Do you stop at the red light? Or do you drive 120 miles an hour like it's the Autobahn down, Route 95 across the US? You want to be able to reward really good behavior. And one of the ways of doing that is being able to decrease the costs, the insurance costs that people have.
Got it. Excellent. Thank you. That was very comprehensive. I'm just curious, how long have you been in the industry now?
So we got started in 2017, and we've continued to build the company ever since.
Got it. And how has the evolution been? Like, what have been your milestones in terms of volume of business and also in terms of your solution?
Yeah, so we got started late in 2017. We were accepted into to Y Combinator's program out in Silicon Valley in the summer of 2019. Raised a seed round shortly before the YC program ended. So that was around like September, August of 2019. Raised our Series A in December of 2020, so a little over a year later. And then now just closed our Series B that you mentioned in the beginning as well. So we provide probably at this point well over $20 to $25 billion worth of total coverages out to the real estate investor market.
How many customers would that be?
That's a good question. We break it down by coverage limits. I would have to ask. I don't have that.
Got it. No worries. No, I just wanted to know, has your growth been linear, or did you have a lot of early days without growth and then you had a spurt of growth later on? I just wanted to know.
Yeah, absolutely. Like any startup, we trudged along at the beginning, trying to both validate the product and validate some product market fit, as well as try and persuade, which may have looked like begging in the early days, as it is for most startup founders. Trying to convince these folks that they should give a shot to Obie. So definitely some very lumpy growth in those first couple of years, 2018, 2019, really trying to figure out exactly where we were at. And again, it's difficult in the insurance space. It's not necessarily just a SaaS product that we can build. There's the regulatory hurdles and the licensing and some really big challenges that you have to overcome. But since then, we've seen pretty exponential growth over the last probably 2 years, growing well over 200 to 300%, over the last couple of years. So it's been a really good journey, and I think it aligns really well with the emergence, which I'm sure you've seen with a lot of the other guests that I've listened to you have on your show. The increase in proptech over the last couple of years. Obie is successful because proptech has continued to expand. As the real estate investor community, there are folks now that, when Ryan and I were in this space a decade ago, the folks that were the managing partners or managing directors or the directors of a lot of these really large, real estate PE firms, even down to the smaller deal by deal real estate investors, there were folks that had just really transitioned over to Excel, right? They had been on an HP 12C calculator for a very long time and a legal notepad. They finally transitioned into Excel probably in the 2000s. And they didn't necessarily want to jump into proptech. And I'm sure, as I've talked to a lot of our proptech friends and a lot of the things that you've heard, the adoption was difficult in those late 2000s and early 2010s. But what we're now finally starting to see, which is great for proptech and great for Obie, is you have a generation now that's in charge of a lot of these firms, and they've grown up with an iPhone and they have an expectation of technology. And so they're actively looking for ways of creating these efficiencies. And so really over the last probably 5 to 7 years, you had the emergence of these platforms. A lot of them started with, the first generation of proptechs, right? Your liquid space, your 42 floors, your VTSs of the world. And it provided a really good roadmap to show the venture community that there were really good opportunities inside the proptech space that had largely been untapped. And so for Obie, we've really been able now to support those new proptechs and those existing proptechs as they come up. We've been able to be a really good partner to show them, here's ways of we have found to attack this market and get adoption into a new digital insurance product. And so we really value being able to grow with our partners. And so as proptech has grown, Obie's been able to grow right there with it because we embed directly in there. So the best things for proptech are also the best things for Obie as well.
Excellent. I had a brief aha moment when you were sharing this. So we are transitioning from the millennials to the Gen Zs, right? And PropTech has been primarily millennials, maybe, transitioning. So instead of linear growth, I see the moment it transitions to the Gen Zs who have been who live with technology, it's going to actually the curve is going to go north, isn't it? Because suddenly there will be a change of guard to from the old folks to the new folks, and then the adoption, technology adoption, would not be foreign to them. So I think we are in that cusp now where we will see the adoption of technology in real estate going only north, is how I feel it. Do you agree to that observation?
Yeah, I couldn't agree more. I think you see this. We make a stat. Let me see if I can think about it really quickly. The the real estate investing hashtags on TikTok have billions and billions and billions of views at this point.
Wow.
And I think it's going to be, as you said, you're going to have this like linear curve over the last several years of the millennials that said, "Hey, I worked at one of these large real estate brokerages, or I worked at one of the investment firms, or I worked at one of the data providers, and I've found a way of doing something that I do on my day-to-day basis easier, better, and faster. And so I'm going to go out and create that single point solution." And so that's done a really good job, because it is done something that a mentor that Ryan and I have, and who told us this really early on. In order to be successful in startups, you need to do one thing and do it well, right? You found that one area that you can attack, that one pain point, and that inside of an antiquated industry, and the fintech space in general, inside of banking and lending has found this, but PropTech has had a slower adoption curve, or a slower innovation curve, right? It's still, I think, in its infancy overall, and a lot of that's due to what you just mentioned. And so, in order for a lot of these folks to have been successful, you had to create one product that was solving one pain point. And then it was easier for you to go into these firms, or into the large brokerages, or into a CBRE or a Cushman or a JLL, and say, "This is the pain that you have, and this is how I solve it." And it becomes very clear to them. And it was an easy way for them to start opening up the door to tech and innovation in the prop tech space inside of all the legacy players. And I think what's going to happen now with Gen Z is, I think you're going to start seeing a consolidation of some of these platforms, right? Both because of market movements right now, but because I think PropTech 2.0, or maybe we're on the cusp now of PropTech 3.0 here, you're going to see a consolidation of solutions. You don't need the single pain point and single solution anymore, because you're introducing a generation into the market that's used to using one system, and mentally they know that system can do 10 different things, 10 different unique individual things. Whereas 10 years ago, that was overwhelming, right? You wanted to use Excel because that was overwhelming enough and you just learned it. But now you can take maybe building access and insurance and maintenance and environmental resourcing inside of those buildings, and leasing, and whatever it might be, and start consolidating that into one centralized solution, and be able to actually start adding in all the different players to those different solutions. And I think that's the next thing that's going to come. You've had really good innovative products that have started over the last several years, and now I think we're going to start to see some really interesting consolidation, or more active collaboration between those platforms. So that way you don't have to use 10 different platforms to do 10 different innovative things. You're going to want to log into your single TikTok or your single Instagram, right? Or whatever the Gen Z kids are doing these days, and have those solutions in one singular place, and you want them to all work collectively together.
Excellent. I'm loving this conversation. You're a great communicator, a great storyteller. I can continue going on and on. Let's move to a little bit about your demography, your target customers. I'm sure, as you said, you focus on a narrow segment first, and then you broaden. How did you start, and today, what kind of a customer profile, target markets do you offer your services?
Yeah, so Obie is solely focused today, although that will change in the future, on residential real estate investors. So whether that's somebody that became the accidental landlord, as we call them internally, that's somebody that might have had a condo and decided not to sell it when they bought their first home. They wanted to keep it and turn it into a rental property. The nice thing about those folks is that they usually get the real estate investor bug. They start playing around with the prop tech platforms to do their leasing or maintenance, or property management. Then they want to buy some more, and then they get their friends into it. So it's always great to see when that happens, and that's a target customer of Obie's. And then we span all the way up to folks that might have 1,000, 2,000, 5,000, 10,000 units, right? If you've got 10,000 units, we might not be as fast as, again, as I said earlier, sitting on your couch on a Saturday morning and buying insurance, but we can do it in a really good streamlined manner that makes you, again, feel like you're really in control. So the residential real estate market is what Obie is solely focused on. We started pretty broad when we first got started. We didn't take the advice that I just gave you and out to your listeners of doing one thing and doing it well. We went to everything. We did small office, small retail, multifamily, single family, industrial, self-storage. And true to form, we early days, and that's fine, and that's what happens with every startup. It was mediocre on every single one of them, as opposed to becoming an expert, right? A very deliberate expert on one segment of the market. And as I'm sure a lot of your listeners know, the last 10 years has been a boom for the residential real estate investor market, as people have looked for alternatives to the public equities market. And so it lined up really nicely with where Obie was seeing a lot of traction. And so that's what we're focused on today. But that will be expanding here in the future.
Got it. So you mentioned that pre-Obie world and post-Obie world, but I'm sure there is competition. Okay, so what's the competition like? Are there other players like you in the fray today?
Yeah, so there's obviously the traditional insurance players, your insurance carriers. We still work with them on a day-to-day basis, and like them. The coverage is good, the rates are good. It's difficult to get a quote. So those are the folks that we typically go up against the most, are your traditional insurance companies that have been around for a really long time. There's a couple of startups that are on our tail, but we've always felt like the partnership route builds a really nice moat for us. As long as the partner's always happy and their customers are happy, it's difficult to change those providers, right? And I think being the first mover in the space provides us a really good, solid first mover advantage that has allowed us to really build a competitive moat around the product that we're building.
What kind of partnership, when you say partnership, what kind of partnership are you talking about?
So those are the partnerships that I had mentioned earlier. Those are the channel partner relationships, all those prop tech platforms that we embed ourselves in. Those are what we consider to be partners internally.
Got it. Is there a further scope for disruption in insurance? Like, I mean, you have achieved what you have. Where do you see this going further? What other disruptions and innovations could happen in this space?
It's a couple of things. First, even if we stayed in the residential market, there's over 17 million residential real estate investors in the United States, and they spend collectively over $63 billion a year in insurance premium. So even if we never changed, we're still barely scratching the surface. We are a tiny little ant still in this market, even with the exponential growth that we've had. And so the residential market will always be the core focus of where Obie's at, and more broadly, really focusing on that real estate investor. And so from there, we'll continue to be expanding on the asset classes that we continue to serve. But I think long term, where the value for Obie is that we're almost a data company that sells insurance, right? We sell and can predict and make a bet with insurance. At the end of the day, an insurance company is really making a bet with the consumer. They're hoping that you pay in a premium and that they don't pay out more than that in that claim. That's how insurance companies make money, and it's also how everybody's able to take risk in the market because they know that they have insurance. And so it's a really good, healthy, symbiotic relationship. But I think long term for Obie, as we talked about before, if you can start identifying the correct landlord profile and you can start building a really good, high quality data set, then the sky's really the limit. I can provide cheaper insurance to those clients based on that landlord profile, and also be making additional revenue for Obie at the end of the day. And so that's the future. The future in insurance is data. And how can you collect that data? How can you find that proprietary information? And then how can you start applying that to the market that we're working in?
So insurance is purely tech play, data and tech play, isn't it? As you said.
For the insurtech space, absolutely.
Hmm.
Insurance
If you're
is
not a tech player or a data player, you will run out of businesses. How I see it, people with
yeah,
tech
yeah. I
and
mean,
data will
and
outcompete you.
in this market, absolutely. There's not enough actuaries and underwriters sitting in front of an Excel spreadsheet to plug these numbers into that's ever going to be able to compete with what a computer can do. And even though what we do is fairly novel, I'm afraid of what I can start plugging this into to Chat GPT, right?
Mm,
And they can do it even faster with
mm,
even more predictive. And so I think that's the next stage in so many of these different markets. Large language models, and I'm sure a lot of your other guests have talked about this. There's so many interesting things that we're on the cusp of within the prop tech space. Even in the last week alone, utilizing a GPT model to help residents with questions that they might have, or to start triaging maintenance tickets that they have, or even in the insurance world, helping to better manage the claims process. So you can
mm,
have a GPT model that's reading over an insurance contract, the insurance policy,
right.
and then as the claim comes in, you can have that model assisting with that claims adjuster and saying, hey, here's the relevant spaces. This is what I think we need to pay out based on the claim that came in. And then all that we have to do is then double check and make sure, was that correct? Did the
Mm,
GPT model actually find it? And so what
and
might
it,
have taken an hour or 2 hours is now down to maybe 5 or 10 minutes. And so
right.
I think that's the next evolution, both in insurtech and proptech and fintech in general, is what can this technology do to make us even more efficient? And
Right.
the end consumer is just benefited by that. We are,
Got it.
again, as I mentioned, and especially with the Gen Z market, it's the I want it now generation. Nobody knows what it's like to have dial up internet. I remember what AOL used to sound like, right?
Mm,
And probably playing that noise for anybody that's in that Gen Z market is going to have no idea that it used to take people a couple of minutes to get online. And even that was novel. That was revolutionary at the time.
yes,
And so
absolutely.
we're getting to a point where we're finding these iterations and these efficiencies, and I think we're going to continue to see that in the insurance market as well.
Excellent. Coming to the next segment, which is something my listeners like it a lot, especially entrepreneurs who might not be in the same space as you, but the knowledge is very very valuable. Which is, since this is a business podcast, right? They're primarily, entrepreneurs are interested in learning about the go-to-market strategies and growth strategies. You mentioned about your early days where it was not as easy, but could you summarize what growth strategies have worked for you for achieving growth and scale? You said you have had exponential scale. Is it through partnerships, through promotions, through how do you get growth? What has worked for you in the past?
Yeah, I would say it's a couple of things. The first thing, and I mentioned this, and it's written on the wall in my office. Do one thing and do it well. I think for early stage startup founders, prop tech, fintech, it doesn't matter. It can get very challenging and distracting when you're talking to your customers, which you should always do, but they always want to be very generous with feedback. And they're telling you all the different things that you could continue to do to enhance the product or the platform that you've created. And a lot of founders, I think, us included, want to build everything because they want to satisfy those clients and those customers. And so the best growth strategy early on that I can give people is to do one thing and do it well. When you hear a good suggestion from a client or a potential client, you say that's really important, and we're going to write that down, and we're going to add that to our roadmap. But how do you feel about what I just presented to you? Does this solve your problem? Is this something you're willing to pay for? Because if you're able to then do that, and you're able to convince them to convert and become a free user, a paying user, adding those additional features after you've already solved that first pain point will become so much easier as you start introducing those features to them. That's the secret to a growth strategy. And I would say in tandem with that, something that your listeners can use, it's a free resource, and that we got a lot out of is Y Combinator puts out something called Startup School.
Mm,
It's free resources, it's talks, it's documents and support that's really reflective of the program that we also went through Y Combinator, but it's free for all founders online. We went through it before we got accepted to YC's program. And I think the lessons, the very, I think, hard fought and hard learned lessons that a lot of their founders who are now the partners there have learned through their own companies really influenced the growth and marketing strategies that Obie had in our early days as well.
Got it. You mentioned about tiding through your early days, especially in a hard market like yours, because insurance needs trust. It has an element of risk. So unlike some other SaaS company where you can give it a try, it's a hard sell for you. How did you tide through? Maybe you could take us back through those memory lanes. How did you tide through that? Was it patience? Was it keeping at it? How did you win the confidence of your early adopters?
We had there's an investor that we were always pitching. We were always too early for him, but the thing that he always called us was we were a cockroach, meaning that somehow we never died. And so I think that's the first piece. If you believe, even in a harder market or a highly regulated space, but even with a SaaS product or something else, if you can stay alive, that means that you're gathering the feedback and the features, and you're sticking around long enough to hopefully be able to really figure out and hit that exponential growth curve. So that's the first piece. The second piece is really, I would say early on for us, we did, and we fell into the trap that I just described. We listened to our customers' feedback, and then we tried to build everything that they said, because we figured if we added more features, we could continue to satisfy our customers. But we were mediocre at best on every single one of them, as opposed to being an expert on one singular one. And so those were the challenging early days, where Ryan and I were funding this out of pocket. We truly believed that there was a market to be had there, and had to continue to stick around and had to get smarter as we grew. We used the resources that were available to our disposal, and we found a couple of really good, finally, early customers that were willing to take a chance on us, and were willing to sit there with us and provide not only their time, but their real estate portfolios as well. And for some of those folks, it might have been 1 or 2 units. For others, it might have been 10 or 12. But we sat there with them and we went through exactly what did your insurance process look like before? What can we mirror with this? And then how do we get you better coverage or the same coverage at the same or a better rate? And were you willing to take a chance on us? And I think what I've found, and what I've given advice to other founders on is find those people that are willing to be generous with their time. Because early on, you don't need 100 customers. You don't need 500 customers that are all on your free beta, meaning that they just signed up and they never actually use it. I would rather find the 1, 2, or 3 customers that are actually going to be willing to implement this solution in their day-to-day, or at their brokerage fund, or at their real estate shop. Find those people, because they will be more valuable than any vanity metric of how many signups that you actually have. And once you get one, then you ask them as well. I think one thing that probably all of your listeners and all of your guests can attest to is that even though real estate is a massive market, it's really a small community. And so if you can find that first customer, most real estate investors, most real estate brokers, most folks in this space, they know somebody else who's similar to them. And you can ask them then for that introduction. And so that first customer becomes 2, and then 2 becomes 4, and 4 becomes 8. And you start to multiply from that standpoint. That's something that I wish that we had gotten smarter on earlier on, and had been a little bit more strategic in the way that we actually went about the market.
Excellent. Obie, Aaron, where does Obie go from here? So you got your funding this year. So is it to scale or introduce new products? What does the next 1 or 2 years look like for you?
Yeah, we're going to continue to scale in this market. So we just raised our Series B. It wasn't necessarily funding that we needed, but we have a really good, strong product roadmap and strategy roadmap over the next 2 to 3 years. And so continuing to expand in other asset classes, and really also doubling down where we know that we're winning. We're building really good market share in this residential real estate investor segment class. We want to continue to double down and triple down in that market to make sure that we're continuing to build a really strong brand there. So going back to, again, that do one thing and do it well. We've started to do that, and we're going to continue to do it really well. And now we can start adding that second thing. Finally, now, as Obie has matured through a Series B, we're moving on to what's that next product? What is that next thing that actually looks like? Because we found traction and we built the business units that are needed for the existing business to be really successful. So what can we go back to the drawing board? What can we go back to what felt like the early days of 2017 and 2018, where Ryan and I sat around a whiteboard and said, how do we enhance the product, right? What do we want to think about and what does this look like? This gets us now back to, I think, a lot of the fun of being a founder and an entrepreneur as well is what's next? What do we do? And I think that's what's on the roadmap here over the next 6 to 12 months. And then running that exact same process of how do we build this next business unit? How can we enhance what we're doing with already the customer base that we have?
That isn't that exciting as a founder to know what's next and staying at the bleeding edge or the cutting edge of whatever space you are in. I think that's a thrill which is patchless, isn't it? So
oh yeah,
excellent. This brings us to the end of a very, very enjoyable conversation. Aaron, as I told you, you're fun to talk to. You are great to listen to. Usually, I do teaser videos of every interviews, but you know what? I'm just confused. There's so many bits which were so interesting. I will have to release a lot of teaser videos from the conversation that we had. Thank you so much for your time today.
Thank you, Ravi.
See you around. Bye-bye.
Bye-bye.